The Canadian bank results are still rolling in. Royal Bank posted a jump in fourth quarter profit and lifted its dividend. And National Bank says its fourth quarter was boosted by strong wealth management. Let's get more from Tony Ciero, President and Chief Investment Officer at Caldwell Asset Management, a division of Caldwell Securities. Tony, thanks for joining us.
Thank you, Andrew. Pleasure being on.
Did anything jump out for you with these Royal Bank results?
Fantastic results. We were expecting that, particularly the capital markets and wealth management, where we've seen the most growth. The other sectors, the personal banking side and loan growth, we can see that a little bit under pressure going forward. The personal banking, as banking fees come under scrutiny a little bit more, and loan growth, direct reflection of the Canadian economy. You mentioned earlier that the housing prices and costs are coming down, so loan growth will be stagnant and potentially the provision for credit losses will increase. But the capital markets and wealth management, that's the area going forward. And if you can hone in on that, you definitely have potential good growth going forward.
That's interesting. Sorry, Tony, I cut you off there. You refer to fees. Do you think, the budget, as you know, referred to the government's desire to improve competition in banking. Do you think the banks will be under scrutiny over the fees they charge?
I believe so. You're seeing on the investment side, fees being more transparent. So I believe something will be done on the personal banking side. And not to get into details or as far as we know, but if you see a creation of a stable coin currency that's backed by the Canadian dollar, stablecoin will make everyday banking more efficient, wiring transactions at zero cost. So things like that could put pressure on personal banking side.
The banks will resist that. People doing anything at zero cost.
Exactly. And one thing I do want to mention, on the dividend yield, they increased by 6%, and that's the quarterly dividend payout. And if you factor yesterday's price, the new yield will be about 3%. So that dividend hike of about 6% on their quarterly dividend will lead to about a 3% dividend yield. And that brings it back to within the minimum standard. If you're looking at some investors living on the dividend yield, 3% is acceptable. So that's quite positive as well for the bank. So I'm glad we saw a dividend increase of bring it back around 3% overall.
That's interesting, but it's not really much of a yield, is it, compared with some of the pipeline stocks? Or you can do better even with a name like Canadian Natural Resources. It's not that generous, 3%.
Exactly. And again, I've only secluded the investors looking at investing for dividend yield. Overall, though, you have to take the company Royal Bank in itself and its growth outlook going forward as part of the equation if you're making an investment decision. But vis-a-vis the National Bank, which increased its quarterly dividend by only 5%, we anticipated a 6% increase there as well. And that 5% dividend increase only means it still will be below 3% on the dividend yield on the stock. And that might not hit the criteria that some investors are looking for from a yield. So National Bank came out with very strong earnings this morning as well. Capital markets was an area, so was wealth management. So trending in the right direction. And earlier this year, the acquisition of Canadian Western Bank, you can see that acquisition filtering down to the bottom line as well. However, though, the dividend yield was a little bit of a disappointment. We anticipated a 6% increase. I'm not sure that will affect the stock performance today. I think it'll do well as Royal Bank, but a little bit disappointed that the yield wasn't increased a bit higher.
So you'd be inclined with new money to buy Royal Bank, but National Bank is a hold for you right now?
Yes, and there's a couple of reasons for that. Royal Bank, we like the acquisition of HSBC Canada it did last year. Now, even though HSBC is a bank in Canada, it has the global capabilities. So Royal Bank, the explicit revenues, you see them right away, so reduced costs, bringing on more revenue streams by the acquisition. But the implicit revenues that you can't see are what we anticipate going forward. That intellectual property you got from a global wealth manager will reflect down to the bottom line of Royal Bank as it it enhances its scope, more of a global investing bank versus just a domestic bank. So we think those implicit reasons, intellectual property acquired vis-a-vis HSBC Bank Canada, will do well going forward. Also, Royal Bank raised their profit forecast for next year, the profit targets for next year, and that's quite good to see. Royal Bank is the Canada Bank. It's the People's Bank in Canada. Our economy seems to be in a little bit of a rut, but however, Royal Bank continues to raise their target, which is pretty positive.
Give us your take finally, Tony, if you would, on gold. What kind of a weighting are you holding in your portfolios in bullion?
On the high end, it's 5%, and the more conservative end, it's about 2%. And the reason why we're doing that, it's a direct hedge if you continue to see a weakening of the the U.S. dollar. There's all kinds of political pressure on the U.S. dollar to weaken it. You want to improve your exports, and you want to buy more domestic, so you weaken your currency to do so. And gold, because it is valued in U.S. dollars, if the U.S. dollar becomes weaker, the price of gold will need to appreciate. It also is not always, but historically there has been times when you saw market volatility and the price of gold stabilize or increase. So for us, it's a way to mitigate some portfolio risk, but also to mitigate some of the political pressure of declining U.S. dollar.
Thank you very much, Tony. Really appreciate it.
Pleasure, Andrew. Thank you.
Tony Ciero, President and Chief Investment Officer at Caldwell Asset Management.